In this presentation, we will work a problem recording transactions in the Debt Service Fund, the General Fund, the Capital Projects Fund, and the Government-wide Activities. Our focus is on the Debt Service Fund. That's where our main focus will be. Information is going to be on the left side. We're going to enter that information into the blue area on the right side. We will journalize the journal entries in the General Journal, then post them to our worksheets. The worksheet will be in order in terms of a trial balance. We'll have the assets in green, liabilities in orange, what would be the equity section if it was a for-profit organization in light blue, fund balance here for the funds, and then what would be the income statement account, the temporary accounts, those that would close out to the equity section if it were a for-profit in dark blue. We're going to have the same information for the general fund, same kind of setup for the debt service fund, and then the government-wide activities and the capital projects. So we're going to go through these transactions and see some of the interplay between these different funds and government-wide activities as we go, as we do so. First one, general fund collects and transfers tax to the debt service fund in the amount of $880,300. Amount used to retire outstanding serial bonds is the $830,600. Remainder used to make interest payments on the serial bonds. We're going to first record this transaction in the government-wide activities. The government-wide fund is going to be on an accrual basis, which is something we're going to be more familiar with. So let's go ahead and record this transaction. First, we're going to say that we collected the taxes. So we're over here in column Y. We're going to say that cash is going to go up and we got revenue for it. So the other side is going to be the revenue. And so we're going to pick up the amount. I'm in C3. We're going to say equals and scroll back over to our data. We're going to pick up the 8,300. That'll be the debit and that'll be the credit. So that's going to be the first transaction we have. We're going to scroll back over to the cash up top in AE3 where we will say equals and scroll over and point to that 880,300, bringing that amount up. Other side then to the general revenue for the taxes. And that's going to be down here. We're going to be in cell AE17 equals and scrolling back over to pick up that credit and enter. So there we have that, and that will put us back in balance indicated by the green zeros. Now we're going to go to the second item that happened, which means we used that money to pay off the serial bonds. So here's going to be the serial bonds. They're on the books at $830,300. We're going to pay them off plus some interest. That means that that amount needs to go down to zero. It has a credit in it, so we're going to debit the serial bonds because now we're going to pay them off. And then we're going to credit cash for cash. And we're going to say that the serial bonds need to go off the books for $830,300. And then we're going to credit cash. And it says we paid more than the 830 because we paid interest on it. So I'm going to say negative, and we're going to pull this over from our data. So I'm going to go all the way back over. We're going to pull this over from the data saying that we had cash paid of 880. That's what we paid. The difference then is going to be the interest. So we're going to say that's going to be a debit. I didn't put the two debits on top. I basically constructed this the way I would think through it. If you want to reformat it for debits on top, you can do so. I don't think it's necessary unless you're in a situation where you have to put the two debits on top. And then we're going to say that that is going to go to the interest. So it's going to be a form of interest. It's going to be down here in terms of the interest. And we're going to say it's going to be interest on the long-term debt. Let's say interest on long-term debt. So there's the one. So there will be our transaction. So we're going to record this one out now. So here's the serial bond. We'll record that one first. We are in AE9 where we will say equals and scroll back over and pick up the debit. And then we have the cash. So here's the cash. That's going to be up top. I'm going to do this with the keyboard by saying F2 plus F2. Scroll back down and pick up the credit to cash. And then we have the expenses, interest, long-term debt. So we have the expenses, interest, long-term debt. We are in AE20. Equals, and we'll scroll back up and we will pick up that amount, and that then puts us back in balance. Now let's take a look at what happens to the general fund, because that's probably the second fund that we might be most familiar with that is going to be recorded in this transaction. The general fund is going to be the one that every type of governmental or fund account is going to have some type of general fund. Now, the general fund's the one that collected the revenue and then transferred it to the debt service fund. So when they collected the revenue, now we're on the fund side of things. Instead of the government-wide activity, we're going to say the cash goes up and it went into the general fund, and the other side is going to be increasing revenue. So cash and revenue for the taxes, once again, that is going to be for the 880,300, 88,0300, and then that's going to be the debit and the credit. Let's post that out. Here's the cash. We're going to debit that. That's going to be in K3 equals, and we'll post that to the debit and enter. And then the credit is going to be on the revenue side. So here's going to be the revenue. We're going to be in K11 equals, and scroll up to the credit. So there we have that. There is the debit and the credit, and that puts us back in balance. Now we're going to take that money and we're going to transfer it to the debt service fund. So when we transfer it to the debt service fund, the cash is going to go out of the general fund, because we're in the general fund, and then it's going to go into a flow type of account, which is going to be other financing uses. Other financing uses, and it's going to be transferred out. So we're going to put it there, and notice again, we're tracking the flows that are happening. It's going out of this general fund into the debt service fund, and that's going to be for the same amount of the amount we received. So there we have that, and so we're going to record this in the other financing uses down here. We are in K16 equals, scrolling back up, and we'll pick up that debit. And then the other side is going to be going to cash. So we'll scroll back up to cash. We are in K3. I'm going to do this with the keyboard, F2 plus F2. Scroll back over and we'll pick up the cash. And there we have that. So now we picked up the revenue and then the related, the inflow and the outflow, cash back down to 0. Now we'll see what happens with the debt service fund. So now we're in the debt service fund. This is really where our focus is. And here we're going to say that the cash was transferred in. So we got transferred in cash from the general fund. So cash is going up by that 880300. So it's going to be going up in essence by this amount of the transfer. And then the other side is going to go to a transfer in. So we're going to say that's going to be other financing source. So this is going to be equal to other financing sources. It's going to be an interfund transfer in. And that's going to be the credit side then. So there we have it. There's our cash and the other financing source, the transfer in. Let's record the cash first. So we're going to be over here in cell U3 where we will say equals and scroll over to the debit. There's the increase there. And then we have the other financing source. So the other financing source, the transfer in U11 equals, and we'll pull over the credit then on that side. So there we have that. Then we're going to record the activity for the cash payment of the bonds that were outstanding. Now this will be similar to the transaction. I'm going to scroll over to the government-wide activity we have here. However, we don't record the bonds on the books because they're long-term for the debt service fund, and we're recording a modified accrual basis, and therefore we're going to record the flows. So if we think about this transaction, the cash is still going to be doing what the cash does. That's going to be the same. Serial bonds payable, we don't have that because that's a long-term item and we don't have it on the short-term statement of the short-term flows of the fund accounting under the modified accrual basis. So that's going to go somewhere else. It's going to go to expenditures. So we're going to actually record this to expenditures. This should look a little bit funny. Expenditures on the principal, and that's going to be for the same amount. It's going to be for this 830,300, and then the cash is going down, so cash is going down, and that's going to be the same. So we're going to say that's going to be the same as the cash going down for this transaction. And then we also had the interest, and that's going to be the interest down here. It's going to be an expenditure as opposed to an expense, and then the interest amount is going to be the same amount as we had on the government-wide activities. So there is our transaction. So let's record this out. We've got the expenditure first. So we're going to scroll down to the expenditure on the principal. It's here in U14 where we will say equals and scroll back over to that debit. And there it is. So that increases. And then we have the cash. So cash is going to be up here in U3. I'm going to do this with the keyboard, F2 plus F2, and then scroll back down and pick up that credit. And then we have the expenditure for the interest. So we'll scroll down to the expenditure for the interest in U15 equals, and we will pick up the expenditure for the interest. That then putting us back in balance. So we're good on the green zeros there. The last fund we've been working with is the Capital Projects Fund, and there's not going to be any transaction within the Capital Projects Fund for the first item. So let's scroll back over. Let's go to the second one. I'm going to go ahead and highlight this and say that we'll make it green to say that we've done that one. We are now on number 2. Number 2 says it's issued serial bonds to finance capital projects. So now we got to issue the serial bonds. We're financing the capital projects. Here's the face amount. We sold it at 102, so we sold it at a premium, 102% of the face amount, plus accrued interest. We had accrued interest and premium recorded in the debt service fund. Okay, so let's first go to the government-wide activity because it's going to be on an accrual basis, one that we would be more familiar with. So this is going to be over here in column Y. So we are in column Y. Let's make this a little bit smaller. We're on number 2. We're going to say that we're doing some financing, so cash is going to be increased. So we know that cash is going to go up, and so we will increase the cash amount. Now I'll put in the number a little bit later, but we know that the serial bond is going on the books, so that's going to be a liability. So we would have a liability for the serial bonds. So we'll call it serial bonds, and we know what that's going to be for because that's the face amount of the bond. It's going to be a credit, so instead of saying equals, I'm going to say negative, and scroll to the left and pick up that bond amount for that face amount. Okay, and then we know that cash is going to be at 102, plus we had some accrued interest. So to calculate that, I'm going to say that this is going to be equal to, let's say, negative of the face amount, that times 1.02, that's 102%, and then we're going to add to it the accrued interest. So the accrued interest is going to be here, the 88.5, and there we have that. So that's going to be the amount of money that we're going to receive, and then we're going to have the interest payable. So the interest payable is going to be a liability account, and that's for the accrued interest. So that's going to be, I'm going to say a credit, so it's going to be negative in AA12. Scrolling back over, picking up the credit of the 88.5. And then the difference between all this is the premium. So in essence, we got cash that is greater than the face amount of the bond and the interest payable. That's going to give us our premium, the sum of these, and that's going to be the premium on the bond, which is going to go right under the bond payable. So there is our journal entry, the debits equaling the credits. Let's post this out. We got cash first, so we're going to go up top to cash. We are in AE3, something's in it. I'm going to use the keyboard, F2 plus F2. Scroll back down, I'm going to pick up that cash amount. Then we have the serial bonds payable. So serial bonds payable, that's going to be here in AE9. Something's in it, so we're going to say F2 plus F2. Scroll back over and pick up that credit amount. Then we have the accrued interest payable. So the accrued interest payable is going to be a liability account, and we just called it interest payable, and that's in AE11 equals that 88.5, and then we have the premium on the bonds payable. That's going to be right under the bonds payable, so the premium on the bonds payable in AE10 will be equal to the credit. So there we have that. It's going to be recorded. Nothing. You'll note nothing down here in the revenue type of activity. We're recording assets and liabilities for the issuance of the bond. Now there's nothing going to be in the general fund. Let's go to the debt service fund. So now that we're in the debt service fund, we're in column O, debt service fund. Now the debt service fund is going to take a little bit of time to get used to when we think about these bonds. Bonds are confusing enough. Then we think about the financing of them within the debt service fund to be a little bit more confusing. So if we take this journal entry apart that we put in the government-wide activity that's a bit more familiar to us, we could say, okay, we're not going to put the entire bond on the book. So this amount here, the serial bonds for the debt service fund, we're not going to have that liability account because we're on a modified accrual basis, and we are in essence just tracking the interest. We're financing basically the financing of the bond rather than and we're on a modified accrual basis to do that. So we're not going to have the long-term liability of the bonds payable. What we will have is the amount related to the premium on the bonds payable and the interest payable. Why? Because these two have to do with the financing. So we want to show that in the debt service fund. We're going to show basically the flow of the activity that relates to basically kind of the financing, the interest on the debt. So we're going to transfer that amount of money, the amount related to the interest payable and the premium on the bonds payable, to the debt service fund to do so. So we're going to go back to our debt service fund, and we're going to say, okay, so we're going to have cash is going to be transferred into the debt service fund for those two amounts, the premium and the interest payable. One we're going to call other financing sources, kind of like a revenue, but it's going to be in other financing sources. That's for the premium on the bonds payable. So we're transferring that in for the premium on the bonds payable. The other, the interest, is going to be revenue, because that's going to be our revenue to the debt service fund because it's interest. So we'll pick up these amounts. This is going to be equal to, and if we consider our journal entry, we're going to be picking up the premium amount. That's the amount that's going to go to other financing sources. And then we're going to say this is going to be equal to the amount that's going to go to the interest payable. So when you think about the debt service fund, I would think about this because, again, it could be a bit confusing. You're going to have to think about it in essence of recording the transaction as you normally would under an accrual basis in the government-wide type of activity, and then consider the financing portion of it, the portion related to the premium and interest payable, and then construct what you're going to be tracking for the debt service fund, the cash you're going to need to service those items. The cash then is going to be the negative sum or the plug formula of those items, and there we have it. So we're going to say cash is going to be up top. Let's go ahead and post this out then. So we'll go up top to cash. We are in cell U3. I'm going to do this with the keyboard by saying F2 plus F2. Scroll back down and we'll pick up that debit to cash. And then we've got the other financing sources. The premium on the bonds payable. So that's going to be in U9, where we will say equals and point to that credit. And so we have an increase there. And then we have the revenue. So here's revenue. That's going to be up top in U8 equals, and we'll scroll over and pick up the revenue amount. Next, we're going to go over to the capital projects fund, because this is why we issued the bond, in order to have a capital project. So we're going to scroll over to the capital projects fund. Within the capital projects fund, we're going to record on the fund side the amount of the bond. So again, we're not going to record it as a liability. So let's consider our journal entry in the government-wide activity again. We had the cash going up by this amount. We are financing it in the debt service fund. And now we're going to record the amount that we took out for the use of the capital project is going to be the face amount of the bond. So note we sold the bond at a premium greater than the face amount, and then we're going to transfer the amount that's going to be related to the face amount to the capital projects fund, because that's the purpose of why we issued the bond. So the capital projects fund is where we're going to record then the $8,807,000 on this side, but again, we're not going to record a liability because it's going to be a short-term activity here. We're showing the flows related to the capital projects on the modified accrual basis. So we're going to say, all right, cash is going to go up, and it's going to go up by the face amount of the bond, which is going to be, I'm going to say negative. And if I pick apart this journal entry, we're picking up the serial bond payable, that amount. And then the other side is going to be the credit, and that's going to go to other financing sources, proceeds from the bond payable, kind of like a revenue account for the capital projects fund. Most of the financing from the capital projects fund, of course, being through sometimes of liability financing, debt financing. So, okay, so we're going to record this. Cash is going to be up top. We are in A03 equals the debit. And then in the other financing sources, we're going to be down here in A08 equals, and we will pick up then the credit. That puts us back in balance. Now we're going to go to number 3. So we're back over here in column A and B. I'm going to highlight number 2 and say that we have completed that one. So we'll make it green, as has been our custom. So we're going to say then number 4 says that we have debt service makes lease payment. Amount of the payment that is interest. So the debt service fund makes a lease payment. The funds used to make the lease payment came from the capital grant received by the special revenue fund. So we're going to break this down. We're going to say the special revenue fund got a grant, so there's revenue to the special revenue fund. We're not going to record the actual transaction in the special revenue fund, but we're going to record that in the government-wide activities. Then the special revenue fund sent that money to, or transferred it to the debt service fund in order for the debt service fund to be able to make the lease payment, of which 18,683 is interest. Okay, so let's think about this in terms of the government-wide activity first. So we're going to go to the government-wide activity. So again, special revenue fund, got a grant, revenue, special revenue fund. Let's think about this as a whole with the government-wide activities first. So if we think of this about an organization as a whole, we'd say, okay, money came in from a revenue source in essence. So we're going to say cash went up. So cash is increasing. The other side is going to go to program revenue for the general government. So we're going to say that we have program revenue, general government, because again, the money came in from the grant special revenue fund. That's going to be equal to, I'm going to say equals. I'm going to pull this information from the data, which is the 131. That's the debit and the credit. So there's our first transaction. Let's post this out. So we'll scroll up top to the cash. We are in AE3, where we will say F2 plus F2. Scroll back down and we'll pick up the debit. So that's going to be this amount. And then we have the program revenues in the general government. So here's the program revenues general government. We are in AE18 equals, and we'll pull up the credit. So there's the credit, and that puts us back in balance. Then we used that money to pay off a lease payment obligation. So we paid off a lease, of which part of it was interest. So we had the lease obligation payable. We have a payable on the books. So we have a lease obligation payable, a liability. We're going to say that this is equal to the lease obligation payable. And then we have the interest portion of it. And so that's going to be interest expense. So the interest expense on the lease. And then we paid out cash. So cash is going down. That's going to be what we paid. So there is that. So let's pick up the expense is going to be from our problem. So I'm going to say the expense amount is going to be a debit. I'm going to say this equals and scroll all the way to the left. Pick up the expense of the 18,683. And then the cash is going to be going down for the 131, the full amount. So this is going to be a negative of the 131. And then the difference is going to be the amount for the lease obligation payable. So negative sum of these two. So once again, cash is going to go down, of which 18,683 was interest, and therefore the principal is going to go down by the difference of the two. So let's go to the lease obligation payable. So we'll scroll back up top and say we have the lease obligation payable. We are in cell AE12. We say equals and scroll over to the debit. So decreasing that, and then we have the expenses. So we're going to scroll over to the expenses for the lease. That's going to be down here in AE21 equals, and we'll pick up that debit. And then we have the cash. So that's going to be up top. So we'll be up here in cash. We are in AE3, F2 plus F2, scrolling back down and picking up the cash. And there is that, and then that puts us back in balance. Now let's take a look at the debt service fund. So the debt service fund is going to be very similar over here. We're in the debt service fund column O now. So we're going to say that same kind of thing. We got the financing. So cash is going to go up in order to finance this. So we're going to say this equals the cash that's going to be increased. And the cash here is going to be coming from the inter-fund transfer from the special revenue fund, because that's where the grant happens. Special revenue fund then transferred to the debt service fund, so the debt service fund can then finance the lease obligation. So we're going to say that this came from the other financing sources, inter-fund transfer in, and that's going to be equal to, I'll pick this up from the data, it's going to be the 131. There's the debit and the credit. So we've got cash going into the debt service fund. So we're going to say debt service fund, then cash. We're in U3, F2 plus F2. We'll scroll back down and we'll pick up the debit to the cash. Then we have the other side going to kind of like a revenue account, other financing sources. This is going to be a transfer in. So we are in U11, F2 plus F2, and we'll pick up the credit. And then we're going to do a similar type of journal entry we had over here. I would go to the this journal entry and then piece together the similar journal entry on the debt service fund. So the cash is going to go out for the 131 still. The 112,317 is not going to be decreasing at payable because the payable would be on an accrual basis. It's not going to be on the modified accrual basis. Instead, we're going to put it to some type of expenditure account. And then the same is true with the interest will also be an expenditure type account. So we're going to reconstruct this one on the debt service fund with a modified accrual looking at the flow basis here. So we're going to say that we'll have the cash is going to be the same. So that is what it is. And then we're going to say that the expenditure for the principal, we had the expenditure for the principal, and we have expenditure for the interest. So there's going to be our data. The cash is going to be for, and we could just pull this from same information from the journal entry over here. The cash is this number. The expenditure for the interest is going to be the same. And then the principal is now going to be under the expenditure, recording the flow as opposed to the payable. So there's our kind of related journal entry in the debt service fund. So let's record this out. We've got the expenditure for the principal. We'll scroll back over. We're going to be in cell U14. We'll do this with the keyboard, F2 plus F2. And we'll pick up the expenditure for the principal. Then we'll record the expenditure for the interest right below it. We are in U15, F2 plus F2. We'll pick up that one. And then we have the cash. So cash is going to be up top. We'll pick up cash. That's going to be in U3, F2 plus F2. And then we'll scroll back down and pick up the cash amount. And that puts us back in balance. No activity in the general fund here or the capital projects fund, so we can then go to the next one. I'm going to go ahead and make this green, saying that we have completed that one. We are now on number 4. Number 4 says that serial bonds issued to permit refunding of term bonds. The serial bond face amount is going to be for the $6,540,000. So we're going to issue serial bonds, and then we're going to issue them in order to fund the bonds that had priorly been issued. So we'll pay off those prior funds. Let's first take a look at this in the government-wide activity, the one that will be most familiar to us or on an accrual basis. So we're going to scroll back down. We're looking for number 4. We're going to say that we got cash. Cash is going to be increasing because we're issuing the bonds and we're issuing serial bonds. So that's going to be a liability for the serial bonds. The amount then in Z22 will be equal to, scrolling back to the left, we're going to pick up the amount, and there we have that. That'll be the debit and the credit. So there's our numbers. We're going to go up top now. So we got cash. We're going to post that out first. Scrolling over to cash, we're going to be in cell AE3. F2 plus F2, scrolling back down, and we'll pick up the debit for cash. And then we have the serial bonds payable. So serial bonds payable is going to be, we're going to put it into the AE9. So within AE9, we're going to say F2 plus F2, scroll back down, and we'll pick up the serial bonds payable. Okay, so then we're going to use that money to pay off the term bonds. So here's the term bonds. Now we're just going to turn around and pay off the term bonds. We're going to credit cash to do that. We're going to take the bonds off the books. The bonds are on the books as a liability. So we're going to take those term bonds. They're on as a credit, and we'll debit them. We're going to take this money and pay off those term bonds. Okay, so we're going to record this. So here's the term bonds. Term bonds are up top or in cell AE13 equals, and we will then scroll down and pick up the debit. Other side, it's going to be to cash. So we're going to go up to cash, and we will pick up then the cash amount in AE2. We're going to say F2 plus F2. Scroll back down, and we'll pick up the cash amount. So there we have that. So then we have those two items. That puts us back in balance. Let's take a look at the same activity in terms of the debt service fund. Now, I would consider these two transactions and think about how they're going to look on the debt service fund first, right? So we're in the general fund. If we were to record the same activity in the debt service fund, we're going to say that the cash is going to increase, but we're not going to be going to the serial bonds payable because we don't have any, because that's going to be a long-term item. We are instead going to be putting the other side to some kind of other financing source, proceeds of refunding the bond or something like that. Then the cash on the second journal entry is going to be going out. same item in the debt service fund, but the other side is not going to be going to a payable, bond payable. It's going to go to other financing uses, being on the modified accrual best method as we are. So let's take a look at that. We're going to say that our first number 4 in the debt service fund, we're going to say that cash is going to go up as it did in the prior transaction, and we can pull over the same numbers from our transaction, the government-wide activities, and then we're going to say that this is going to be an other financing source. So other financing source, proceeds of refunding. So we're going to say that's the one we want. There's the debit and the credit. We can post this then. Here's the cash. So we'll scroll back up top. We'll go to cash in U3, F2 plus F2. Scrolling back down, and we're going to pick up the cash up top. And then the next one is going to be other financing sources. So we're looking for other financing sources. We want proceeds, other financing sources, proceeds of refunding. So here we are in U12 equals, scrolling back down, and we're going to pick up that credit. Okay, that puts us back in balance. Then the second transaction, we credited cash. So cash is going to go down, and the top portion is going to be other financing uses. So other financing uses is going to be the debit, dollar amounts being the same. So we'll pick up the same dollar amounts. There we have it. We're going to debit then other financing uses up top in U16 equals other financing uses. And then cash is going to be decreased. So we're going to scroll up to cash. That's in U3. We're going to say F2 plus F2 and then scroll back down. And we will pick up the credit. And there we have that. That then puts us back in balance. Okay, so let's now go back. There's not going to be any transaction to the capital project fund or the general fund.